But what's interesting about the formation here is you are seeing a range trade back and forth, but you are not really seeing that much of a compression of ranges. You could make the argument that this is a compression here because compression of ranges almost inevitably leads to a breakout. So for the past 5 months, we've had a very steady range in the euro. That's true also of the DXY. Notice tight, 5-figure range here. But it's also absolutely no trend. So remember, we have, do I have a yen up here? I did not put a yen up here, but the yen is basically the same thing. That's why I didn't put it up. So for 5 months, since the beginning of the summer, it's only the beginning of the fall now. Oh, wait, I do have a yen. Excuse me. What am I saying here? Okay, same thing in the yen. The yen, we got a little more volatility. We basically have 2 ranges. We have 126 to 121, 121.50. And then we have this one, which is almost the bottom of that one, 121.75 to 118.26. So the major currencies are doing zip against the dollar. Is that true of the dollar in general? And I think we know the answer to that. That's clearly not true, and brings us to the second possible trend line that is affecting currencies and not specifically caused by the dollar or by dollar developments. Let's put it this way. When the dollar rises, let's take a look at this. And what I'm talking about, of course, are commodities and commodity currencies. Let's give an example of it and then talk about some of the background of it. Remember these things. Very little is going on. There's plenty of day-to-day volatility, which is good for all of us. But as far as trend lines go, we have had zip. Frankly, not just since here, I compressed it to, in the euro, I compressed it to May, but in fact, the trend goes all the way back to the beginning of the year. We could say the same thing that we said in the yen. We have 2 sets of trends, 2 sets of ranges, basically. I'm exaggerating. 5 figures from 1.05 to 110 here. And then the other range from here to here from in March and April. And then we have a range from basically 108 to 115, a little bit less in this period here and this period here. No trend. Now, is that true? If you're trading the dollar and you're stuck here, well, you could do a lot of trading, but there is no trend to ride here. Okay. Is that true of the dollar against everything? And I think you know the answer, because I certainly do. This is the same time period in the inverse of the Canadian dollar. Canada is a resource country. And you can see what I'm tracking. That is the Bloomberg Commodities Index. It has a very long run, that's why I used it. And you can see how closely that is tracking the Canadian dollar. Now, this is telling you that for the Canadian dollar, and let's take a look at the Aussie. The Aussie is, guess what? I'm sorry. I didn't put the commodities index on this one. So let's just stick with the Canadian dollar. But you can take a look and you can see the trend, and you can compare it to what's available. What's this? Okay. Here, I made it smaller. So you can see the very great similarity in the trends between the two. And it's basically telling you that they're commodities currencies, which is a statement of fact. So here we have a pretty much straight commodity play for the dollar that is not dependent on and is operating independently of the trend in the dollar or the lack of trend in the dollar in the same time period from here to here, May till the end, May till now, against the majors. Let's take a look at another one. Where's my real here? This is a little more interesting, but it's not dissimilar. This is the inverse of the, and I'm using all the inverses so we have the same comparison. Okay? I want to know the value of the currency, right? Not the value of the dollar against the currency. So for the Canadian here, the reason I put the inverse here is because I want everyone to see what the Canada is doing in a more dramatic fashion. If we put the dollar Canada up here, what happens is as the Canada goes down, the dollar Canada goes up. So you can see it. This is just a better graphic representation. Same thing we have here, but this is the Chinese yuan. And it's interesting, and this shows very dramatically what they have done as far as matching the curves. This is the commodities index, and this is the value of the Chinese yuan. And when they were holding it steady through here, they had been letting the yuan appreciate slightly. But for much of this time, it was very much held in stasis. And then suddenly they did this. We all remember that one. That set off all the turmoil in the markets. And what they did is they brought it down to the graphic representation of the level of the commodities index. Okay, so we see these ones, and Aussie I showed you already. Let's put up DX. This is DXY. Yeah, this is DXY. Okay, I showed you that one. Okay, now, this, and I should have put the commodities index on this. This is the Brazilian real. For the Canadian dollar, for the Australian dollar, the Kiwi would show you the same way, the New Zealand dollar. The change in the currency against the dollar, the lowering, the devaluation of the currency, the selling of the currency against the dollar, the buying of the dollar, is almost exclusively a commodity play on the national economy. And it is primarily related to China, not entirely, but for many of these commodities, China is not just the largest consumer of these commodities, especially industrial metals. It is the largest consumer by several factors. So it is a huge, disproportionate effect on commodity pricing and on commodity currencies that depend on mining resources. What's going on in the Brazilian real is compounded. Now, if I remember, Brazil has about a 14% interest rate. I have to know exactly what it is because they've been trying to defend their currency. So if you're looking to make a big killing, you might very well make a big killing in the currency, but you're going to pay for it in the overnight roll because the rates are very, very high. That's sort of a standard traditional way of doing something. Bring us back to the Euro ERM crises back in the late 90s when is that the late 90s? No, the mid 90s, sorry. When European countries were trying to keep their currencies within bands against the dollar, and they failed rather miserably. Central banks have limited ability to do this. They pretend that they do, but I think the world is actually moving beyond, in many ways, the control of the central banks. At any rate, Brazil has other issues. Brazil has political issues. It has political scandals. It's had an extremely unpopular President, Dilma Rousseff. There are noises being made in the country about impeachment, all sorts of other things. So the Brazilian currency, which is a great trend, although a dangerous one, is based on more than the change in the commodities. Okay,